Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I'm going to answer another viewer question by doing a lesson. And I want to show how I use 3 time frames. Most of the time I'm using 2 time frames side by side, and that strategy will work 90% of the time. But every now and again, you get a setup that's a little bit different and you have to make an you have to kind of alter it. Or if you're looking to be a little bit more aggressive and buy right off of a bottom of a signal, then this is the way to go about doing that. I'm going to show you how to go about doing that approach. So we're using 3 time frames in this strategy, where the middle time frame is giving us a little bit different information than we typically would be using it for. Still looking for confluence amongst the time frames, but it's a little bit different in the way that it develops. I like a 1-to-5 or 6 ratio, and I'm going to explain why. I like the hourly, even though it's 6.5 bars to the daily. I like to look at what everyone else is looking at, so I typically will just stick with the 60-minute chart, and it still works fine if you follow the procedure that I use and maybe not be quite as aggressive with the 60-minute. I think it still gives very, very good signals, and I prefer it over like a 2-hour or 4-hour chart, and I'll show you why. And then finally, we're going to go through the individual stocks that came through. So let's go ahead and get into this lesson now. Okay, so I've got ConocoPhillips up, 3 charts. On the right is a weekly chart. In the middle is a daily chart. And on the left is an hourly chart. Now, what I want to show here is we've got this pullback taking place on the weekly chart right here. All right, now it's a pinch play, meaning the MACD line is pinching in towards the signal line, which is rising, all right? And green DI is on top. Red DI couldn't take over the strength during this decline. So we get this decline and then we move back up, right? It's almost like a V-bottom type of a reversal in a way. But red DI couldn't take out this green peak, and then it immediately drops back down and green comes back and takes over. So I feel pretty confident in looking to buy a pullback here, especially because we're at both of the moving averages. Even though the 18 isn't really rising, it's more flat, it's providing support. And I know I've got the pinch play developing. Now, if you think about it, it gapped up. Okay, so if I'm looking to play a pinch play off the weekly, and this is the whole reason why I use multiple time frames to begin with. If I'm looking to play a pinch play on this time frame, a lot of times my entry could be later. I could get a gap up. It can move up like that. Or if I'm waiting for a little bit more confirmation, I got to wait for it to break out above this previous high. So what I want to do is during this pullback, I want to evaluate what's going on the smaller time frames to see if I can get in during this bottoming bar here. Because what we're trying to do is, if you look at this simple pullback on a weekly chart, if we go down to the smaller time frames, we're going to see that it looks more like this. It's a lower highs and lower lows, and see if we can't look for some kind of a reversal. So during this pullback, this is the setup time frame. Okay, this is basically where the trade is developing. We have a pinch play, we have green DI on top, and we're pulling back to an 18. All right, now if I go to the daily chart, we have this kind of harsh pullback off of this move, and you've broken both moving averages. Now, typically when I'm looking at 2 different time frames, I'm probably not interested in doing it here. I'm waiting for a little bit more confirmation, and I'm looking for the second pinch right here. There's the pinch play at the higher low. So that's after the gap. It's on this bar somewhere. Nothing wrong with doing it this way, and you had really nice follow through right after putting that trade on. So no problem doing that. But if you're more interested in looking at this, we have to have a couple things going on. So during the decline phase here, the middle time frame, I'm trying to evaluate the strength of the decline. If the strength of the decline is not too strong, then I can go down one more time frame. So I've got this move to the downside, and look at, I've got a 0 line reversal developing. I've got MACD a little bit below and the signal line well above. So I think this qualifies as a potential 0 line reversal. The other thing I tell you is, at this bottom, red DI had moved up, but it hadn't taken out green. So the moment we start turning up from here, red starts to drop and green kind of kicks in. But I don't know that at the low. What I do know is that at the low, I have low ADX. So I've got a zero line reversal potentially, and I've got low ADX. So this qualifies for me to say I can go down one more time frame and look for a reversal. Now, the thing is that, as I mentioned, if I go down to this small time frame that's down in this area here, down at this bottom, if I use the hourly, and let's just say, let's zero in on this because I want to show what the viewer was asking me, is saying, if I take this pinch, so this was a pinch play right here. In fact, I've got it on a 65 minute, but let's go to the 60 because I want to make sure you see exactly what is going on. So we make a move to a new low and we have MACD going the other way. So I'd be interested if I wanted to be really aggressive in taking this pinch entry right here. But it is prone to false signals if you play that way. If you are looking to do hourly trades like this really aggressively, then I agree you're going to have a lot of false signals. You got to be really careful, especially if any of these bars are that 30-minute bar. You got to be really careful about taking pinch plays when the tiny bar or the 30-minute bar is a part of the pinch. All right, you want to ignore those signals. All right, but in this case, I have that. What I would probably do is wait for more confirmation. Wait for this get back above the 18. And I know I'm getting in late on the pinch, but I'm getting in very early when I look at it on the other time frames. And it's just a more confirmed signal, bottoming signal. We're getting back above the 18, especially as that's turning up, I think is going to alleviate a lot of the false signals. Now, I only do this type of trade right here when we have divergence in place. What you could do, let's say you don't have divergence, you could wait for this to move up, come back, and make a higher pivot low right at the 18. See how this successfully held the 18 and turned back up? So this is basically a pinch play here on the hourly. And what we're doing is using 3 time frames. So instead of looking at the pinch play on the next time frame, we're using the middle time frame to determine the decline strength, and then we're going to the smaller time frame to really help with the timing. Now, if I go to a 2-hour chart, just so you can see this, let me open this up so you can see. We don't really have a successful reversal pattern. We had a test of the 18 when it was still kind of falling, and then we tried to make it to me, it's just not as crystal clear. I don't see a clean, really clean reversal. I guess by letter of the law, you do have it. So again, like I said, you could make it work, but for me, if the way I'm using it, I'm seeing something a lot more crystal clear in terms of divergence off the low. I don't see that here on this time frame. And then I get the reversal pattern with a clean test of the 18, which is now rising, and a higher pivot low that I think is just a cleaner look. So that's the reason why I go about it that way. There's nothing wrong with trying to use it this way. I just think you're going to miss a lot of the signals that I use using a 2-hour chart. Nothing wrong with using a 65 minute. The 65 minute is going to give very similar signals. There's divergence at the low, and you had the big green bar coming back up, and then you had the higher pivot low on a 65 minute. That might be a good compromise, so you don't have those tiny 30-minute bars involved. But I just usually stick with the 60-minute because it's not that much different. So hopefully this makes sense. Let's go ahead and get into the stocks now. Just briefly, my services can be found at rabilstockresearch.com. So I'm offering a course now, a trading and trend and momentum trading course for $100 a year. So I don't have a discount anymore using the coupon code. That won't work anymore. But if you sign up on the monthly package, where you get 2 to 3 reports each week plus a special video for that package with my research, you will have access to the trading course automatically. All right, let's go ahead and get into the stocks. Thanks. Since we got a big move going in the S&P this morning, I'm just going to give a quick update. So where we left this off before, we broke the trend line, and now we're coming back to test. So that's the 2. 1 would be breaking the trend line, 2 is testing, and then coming back up through here. this prior peak would be 3. Now, we haven't done that yet. I mean, I think this is an encouraging sign because it does look like the MACD does want to hold the 0 line. One missing component here is green DI failed to get above 25 and above the red peak. And now we're making a move up here. I think if we can follow through and get through this high, then I do think green DI will break out above this red prior peak, and that would be good confirmation that the buyers are strong enough to get this to continue. If we have that, then I think you have to start thinking about, so what's going to end up happening is if we get back up through here, we're going to get back up through the 18-week line and confirm this MACD divergence in place. Okay, and if that's the case, then the next target would be the 18-month line, which is declining overhead, but somewhere in that 4250 area would be the target, which is essentially this prior peak. So that's kind of where I am with this right now. I'd like to see a little bit more follow through. I mean, we're sitting in this kind of key area between this prior pullback here and here. I mean, if this fails to take out this high and it comes back down through here, then you're going to put a ton of pressure on these lows. So we're still caught in transition, but I do think this improves things because if we look at the swings, look at what's taken place here. If I were to connect these and create my own swing chart, I can do this, and then this, and you can see we had potential for this to turn down if it came back down through here, but instead it's making a higher low and a higher high. So it has weakened the downtrend. The problem is we haven't really broken out yet above this key level, which again would also be the 18-week line. So that's what I'm watching. Keep a close eye on this range here. I think pretty encouraging. Now, one other thing I want to mention just overall when I go through and look at stocks, a lot of the best looking stocks, the ones that are the strongest, that are showing, I think, the best overall characteristics are short-term overbought right now. So I wouldn't necessarily be looking to chase those stocks. If you get good entry, I don't have a problem with doing them, but just be careful about doing them when they're stretched away from the 18-day or the 18-week line. Okay, let's look at this UUP. This is representing the U.S. dollar index. And so we have this monster move for the year. You see this beautiful trend that's been taking place. And what I do is when I look at I look at all 3 time frames. So my monthly, weekly, daily, right? And I'm looking to see which time frame is in command. Well, I know instantly that the daily is not in command because we keep breaking. You see how we break the 18? We've been breaking it over and over again. We're not really respecting the 18. This is not the time frame where we have a trend. This is the time frame where you can get entries during pullbacks. Okay, and this actually that would have been a tough one. I think that would have been pretty close. It didn't quite break the trend line, so maybe not an entry there, but it was setting up that way. Now, the weekly chart, look at how we're respecting and we continue to come back and test the 18-week. And notice how the 18 and the 40 are moving up at about the same rate. They almost look parallel. I can draw in lines like this and overlay them, and they're pretty close to being parallel. The reason why the monthly it is in a bull trend, but it's not really the trending time frame, is because we only tested it once and we're kind of jetting away from it. So this is our time frame. This is the one we want to watch. And if you notice what's taking place, I mean, if I draw the trend line in, it's basically the 18-week. We're currently potentially breaking the 18-week line. Now, based on what's taken place for the year, I think that what this could be doing is setting up for a correction into early next year. Sometime in the first quarter, I bet we make another bottom, maybe into bigger support. And I would, based on the momentum characteristics, I would expect more upside coming. But if we close the week below the 18-week and this line starts to flatten out a little bit, I think you have to expect maybe more consolidation, potentially a deeper pullback over the next month or two, potentially. That's what I'd be looking for in this index. Another index that was requested was the XLE. Now, this actually represents what I'm talking about. Notice how this was up. And if you go through and look at the strongest stocks in the sector, the strongest energy stocks are up away from their 18-week. They're up about 4 or 5 weeks in a row. Most of them have broken out. We had pretty good entry here, but now they've moved up. So I'm not, it doesn't surprise me to see this is kind of underperforming today, because it has already outperformed pretty nicely. Really, just look at this past month or two. It's made a really nice move on a relative basis. So it's probably just pausing a little bit. But the conditions here in place are outstanding. We've got a powerful moving upward sloping ADX here. MACD confirming the uptrend. We went through an ABC decline that was more of a higher low rather than a lower low, right? You see how you make a higher bottom here as opposed to making a lower low. And as soon as you come up back through here, that's basically a sign that this is ready to get going again. MACD confirming, green DI getting back going, and ADX strong on the daily chart. The problem I've got with this right now, again, is it's a little stretched away from the 18-week. It's tough to trade right now. Okay, so APH, as we get into the individual stock requests, if we notice what's taken place, so this was a deep pullback. We overran the 18. So we wouldn't want to take the first upturn, like this move here on the weekly chart, when you have deep overrun. I don't like doing that. But we came back and tested, and we're making a higher bottom. And you can, again, see them more clearly on the weekly chart. Now, we're still straddling the zero line. You see how this is just above and below? It's not really holding the zero line. I would be more inclined to go ahead and make this breakout above 80 to get more confirmation that this is truly turning to the upside. Now, if it's overbought on the daily chart when that happens, then I'd probably be looking for a higher bottom to form. Now, the good news is, look at the relative strength line hitting new highs. I mean, this is a good stock, don't get me wrong. And if you wanted to nibble a little bit, maybe do a little buying here, maybe off the daily chart, the improvement on the daily chart, I don't have a problem with that. But I wouldn't go into a full position until I had a move back above that prior high. Now, this is a little surprising, but, you know, it's the reason why I keep saying to my subscribers that I don't necessarily want to take any kind of breakout move. I like to wait for a higher pivot low. We haven't formed that yet. I mean, it's trying to form, but look at what's happening today. This is not trading well relative to the market, and we don't have a trigger yet. We're going to need this to turn up to form a pivot low, and you know, we've broken the downtrend line. We've got a lot of signs of improvement. I mean, if you're in on this one off the so if you did this off the trend line break, there's nothing wrong with that. This was a good signal for that. But if you're going to wait for the next signal, you basically have to get this daily line to turn up. And we just don't have that yet. So that's what I'd be watching for now. It's getting pretty close to support. I'm just a little bothered by the short-term pattern, especially day when the S&P is up almost 4%. You know, I mean, it ought to be trading better, but that could turn tomorrow potentially. So we'll just have to keep an eye on it. Everything else looks okay with it. Now, I had a specific question about entry on this one, and the question was related to, do I take this trade here? And the question was really related to the daily chart. Like, this obviously looked really good, and we got a pullback, we got great momentum conditions. Where the confusion comes in is how to recognize what this means, what is going on here. And the way I look at it is, we came down and corrected, but we don't really have any sign of real selling strength because the red went up and then dropped here. And, you know, you could really look at this as a trend line break, and that would have been the one, and then coming back down towards the 18, which is cupping around. So in this area, I would be willing to go down to the daily chart, which is right here, and look for my little 1, 2, 3 pattern where we go up and make the higher low somewhere in here. I don't have a problem doing that. That's a more aggressive entry, but you're following the rules. You're holding the 18 here, you're holding the 18 here, and then you're holding the 18 here. If you have that and you have momentum conditions that are okay, you can take this trade every time, no problem. There's not a right or wrong way to do these entries. It's all a preference of how aggressive you want to be. This is a great setup, okay? Now, if you wanted to wait for this to take out this prior high, that's also a good setup. There's nothing wrong with doing that. If you want to wait for this to make a higher bottom and form a higher pivot low now, that's also a good entry. We've got the breakout entry off of this essentially a 1, 2, 3 pattern, because we have the 1 and then we're making the higher low, testing the low, which is about 50%, and then coming back up through this high would be the 3, and then making the higher low would be the confirmation that I like to use in a bear market, which would be, just giving yourself a little bit more confirmation when you get breakouts in a bear market. So that's kind of how I would go through and look at this, but there's nothing wrong with taking this trade since we were respecting the 18-week after respecting the 18-month. Okay, now this one looks really interesting, this Ethan Allen. So we came down and undercut this kind of key level here and had follow through, but now we've gotten back above this pivotal area and tried to get back below it and then got right back above and held. So when I look at this and look at the MACD, I personally think that this is a pretty good turn. We're getting back above the 18-month. We're breaking this downtrend line. I mean, there's a lot of improvement here. Now, when you go and look at what's going on the weekly chart, this is impressive. This is a really nice, impressive move coming up through this prior high and these prior resistance areas. We're getting the MACD back above zero line. We're getting green DI going. Remember, green DI went down below 25 back here, okay, where this peaked. It dropped. And we have not seen green DI back above 25 until now. This is the first time since the peak we get green DI going. Now, when it comes to entry, obviously we need some kind of a pullback. And this is what I'm talking about. A lot of the strongest stocks have just this big stem to the upside. And I'm not going to chase stocks. I'm just not going to do it. If you feel that you don't want to miss this, then you could buy a partial position, maybe a third or a half, and then look for a better entry on a higher low or something like that. Or even let this pause on the weekly and get a little bit closer to the 18-week. But it's a stock you want on your watch list. This is a really attractive pattern that's developing. Now, Oxy, again, what we're looking at on the energy side is these stocks have played pretty well. Now, Oxy doesn't appeal to me as much. It didn't break out here. The momentum hasn't been quite as good. We've been consolidating. I mean, I would view this, I know this looks like divergence, but really this is a consolidation in a sideways pattern. Even though we went to a marginal new high, I think this is a sideways consolidation, and it probably needs to work down a little bit closer to the zero line before it's ready to go. I don't know that I would do anything with this unless this can clearly get back through 75 now. Now, APA is a different story. This is the same. This is basically the XLE. We've made a really nice move. We had a great trigger right here. So you see how we moved up here and then paused, and then we had a zero line reversal with low ADX. So this is where we're looking at what's going on the smaller time frame. And look at what happened. We had a strong move, and then we get a pullback and a higher low forms. Pinch play. Green DI starts taking over again. I mean, this is a great entry on this pattern. Now, we had earnings through this period, so it's a little tougher. It's easier to look in hindsight and say, oh, you definitely should have done it. But if you're respecting the earnings and how much volatility there is, it can be a little bit more difficult. But this is a great entry just looking at the pattern. Now, we've made a move up. We're up against this high, this 50 level. Probably spend some time consolidating before it's really ready to break out above those highs. That's my guess here. Okay, so let's look at the weekly chart of Penn, and we've essentially come right back down to this big kind of support area. I don't think there's a lot of downside here. The problem I've got with this is that you have to understand we're in a bear trend here, and you want to think about all of these stocks that are in these strong bear trends as having a U-shaped reversal. It's not going to be V-shaped. It's going to be U-shaped. A lot of tech stocks are going to fall into this category. You're not looking to get in here. That's essentially where we are right now. I'll give this a little bit more credit. Let's say we're here. You're still early. There's still downside risk. There's still chances that you're going to underperform the market. Let this base out more, create a better base, turn around, and let's get on the right side of the bell-shaped curve. You want to be getting to you almost want to look at it like a smile, and you're getting to the right side where this is actually curling up a little bit more. That's what I'm looking for in something like this. If you want to trade it, that's a different story. There's some trades that are probably going to be available to you, but I wouldn't necessarily look to get in this from a bigger picture standpoint yet. I think this ABBV is really intriguing. Pull back to the 18-month. We've got strong ADX. a correction on the weekly chart with no sign of sellers. You see how red DI could not get above 25? So we're in this area now where I think you could take a pretty hard look at this if it gets back above this prior peak as a pretty nice turn where the monthly, weekly, and daily are all in confluence at this point. Let's take a look at Caterpillar. So another stock that had just a dynamic move, marginal new high, new low, and then jets off the bottom. And look at how dynamic this move is with ADX in place. Now we're coming up against some resistance you can see really easily on the weekly and the monthly. I don't want to chase and buy this into this area. In fact, if I were a trader, it would be a trading profit. It looks like people are doing that. You see how this is only up 1% today? I mean, this stock has killed the market. Look at what this has done. Do you see how this has killed the market? This does not mean, today does not mean this is a bad stock. This means this has been killing the market and it needs to take a breather while the market maybe plays catch up. Stocks that are trading well, I don't know. I haven't looked yet this morning because the market really just opened when I did the show. I can almost tell you that they're the stocks that have been getting killed. Stocks like Tesla, Apple, stuff like that are probably having a pretty good day just based on what's taking place. We've run out of time. Thanks for watching. Send your stock requests to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.